All right, hi. I'd just like to go through, what it would look like for myself to possibly be looking for a trade on that specific day, such as today. Okay, so I'm looking at a trade possibly on euro and pound. I'm already in one in pound. Already in one in euro, but there's also entries on other assets as well. Um, Normally, I try to look for the most cleanest one, and yeah, if I'm in a euro trade, I try to look for confluence on the pound as well. So, of course, I always go back to the dollar index. So we saw that, yeah, price closed the weekly above the original BC here and above this high. Retrace down into this breaker block and then expanded up on the week. And now we're here on the week. Okay. Um, let's go to the dollar future just to have a look because I didn't show that last time. So you see these two areas. Actually, if I go on the daily, you can see it because I illustrated this SMT divergence. So you see a higher low, and on the dollar future chart, we see a lower low. Okay, so it takes out all these equal lows already and then expands up. So at this point, after all this price action, I'm not expecting it to come down here at the moment. The order flow is not showing, it's not bearish, right? We're creating bullish gaps, respecting it, we're trading higher. Um, Furthermore, there's these equal highs up here. Okay, equal highs are always buy side liquidity. Sell side liquidity. No. This buy side liquidity. No, sell side liquidity. What am I? No. Buy side liquidity. Sorry. What am I talking about? Not enough sleep last night. Okay, and I see buy side liquidity up here. So price would be drawn into this area, right? So you see price stab into it once and it come down. But to me, these are relative equal highs. They're pretty near to each other. So you can think of it as one large swing point, right? So there's a lot of liquidity resting above. So I think we can come above here. There's a gap here on this future chart. If you go back to the dollar index, it's not as clean, but there's this trend line. And we have the rather equal highs here as well. Previous year high, target. What are my targets above these swing highs? And inside this volume gap as well as my immediate targets. Okay. So let's go down to straight to the 4 hour. Just to illustrate here on the daily, um, this, this gap here. Okay, this gap is a bit too bright. Let's put 30. Yeah, so there's this gap in there. That's my it's a busy, but I consider it my R2F gap, which is basically a wick to the left of the gap, one that fits rather nicely. So I see price possibly coming down into there. If we have a look on the dollar index, this one in there as well, and there is an opening gap they got traded once into, but again, it's not evenly painted. If you use the wall painting analogy that ICT that he often uses, trying to find a brush. So if you don't know about it, imagine you're painting a wall. You're not going to get the wall evenly painted on one stroke, each time, right? Normally you're up, down. So to fully paint a wall, sometimes it takes multiple passes to go through. But the thing is, like, once you're done, you normally don't have to come all the way down again. So when price has efficiently been delivered, usually price won't have to come back down. But if price is not efficiently delivered, such as this gap here, it's only been like two very little passes, no body closes. We could expect another pass, and of course this gap in there as well. And of course you can find examples like this one here. Price comes up to it again, just to finish that little spot that didn't get painted through. Okay, and then it leaves. And you can find many examples. Even one here. Okay, So that's a good example. Of course, not every single one, actually most of them, to be honest. So price coming down to here can be expected, and below this gap as well. So what would that mean? That would be the previous day, possibly the previous day's low. You see it here, that would be in the gap, right? So we come back up to this area, somewhat of a order block, and we may see a retracement back into the gap to give us enough oomph to go higher, right? So what are we? We're bullish on the dollar, bearish on euro, these kind of currencies. Okay, so quick look at the 4 hour. We see some relative equal highs being created. Remember, each wick was once an engulfing candle, right? So if I paint this green, just to give you an idea, that's the thing, and that's this thing with backtesting. You see all the candles painted, but as you're watching it live, you're watching every single candle paint, as in it goes through its entire life cycle. So what color? How do I choose? Okay, something like this, right? So this was once a bullish candle, and so was this. So you can imagine if you didn't see this red part here, you see these two bullish candles, you may be FOMO into buying. Um, so we try not to chase candles, and we try to let candles close first. We see one gap in here. This could be the catalyst to bring price higher for today, and it can always come back down again as well. So here we have the confluence of this support area. There's no gaps here on a lower time frame, but it may be possible for price to wick below it. Okay, we always have to keep that in mind. And we look at the news drivers, right? So we see what news we have for the week. I use forexfactory.com, and I think it's /calendar. I would share the chart, but I set the recording only to this window, so I can't bring it in here. That's where I get my economic data from. There's other websites, but I like this one, and I just set it for usually medium, and high impact news, and see what's coming up. Right. So if I'm, let's say, if I'm bullish dollar, and I get a week like this, and it keeps coming down, it comes up, creates equal highs. Then on, let's say, NFP, NFP coming up on Friday, right? And it's a Friday now, pretty rangeful day. Okay, whatever color. And now I have the expectation of these equal lows. So this is building your story, right? This is relative equal highs. I got this entire range. So I'm bullish. So am I expecting price to possibly come into that gap and then boom, go up. Okay, that's one like possible scenario that one could expect. Um, of course, everything you expect does not happen all the time, but you build narrative and you build bullish and bearish arguments when you do your analysis. So I have more bullish arguments for a higher dollar than bearish arguments. So what are the bullish arguments? Respecting this weekly breaker, creating a gap, trendline liquidity up here, equal highs, came in here, SMT divergence, respecting, building bullish. I don't have much of a bearish bias at the moment. Why would I be expecting price to come down here? So things can happen, anything can happen, right? But this is it's all about probability using ICT's concepts, and then you build your bias. You do not have to have a bias in every situation. That's not how it works. It's not about looking at a chart in the 15-minute and being like, okay, where's price going to go? I see a fair value gap, okay, or equal lows. I think it's coming down here at any random time of the day. Okay, and that's where time of the day comes into effect as well. Kill zones along the chart. So yeah, let me bring this forward so we can Stop selecting. Where did it go? Okay. Anyway, gray is Asia session. Green is London, and blue is New York session. Those are the three sessions. I don't really look at London close. That's too late my time anyway. So we get this interesting thing, breaking high highs. One more pass to this order block, and now it's kind of moving down, right? So we have a bit of liquidity here. There's no structure really here, okay? And this is trendline liquidity. Coming down to here would be nice. It's possible. We come down to here. This area is interesting to me. Oops. Thought I locked the chart. Okay. Yeah. I think maybe this area, at most maybe this order block, slightly under it. I mean, just from experience. Okay, so London, I trade London, right? Because that's around London Open is around 3 p.m. my time. And I like euro and pound. I don't trade yen. Very manipulated. I don't like it. So I like euro and pound. So I trade London as the most volatility because that's when they wake up and trade, right? Um, Usually it has the most volatility. Not all the time. As you can see, some London sessions are trying to measure the pip range. Not many. This is dollar index. Sorry. So yeah, dollar would have the most volume in London and New York. Most pairs do anyway, especially the crossover. So this is the dollar index. Let's look at the dollar in futures. Similar as well. So when I like the fact that it's building these equal highs. It leads me to think, okay, you can take a trade higher. Yeah, sure. There are traders taking support and resistance traders, seeing a double top, and they have strategies, and people make money. That's why this. It's not about which strategy makes the most money. It's your discipline and patience and how you approach your charts, how you approach your strategy. But I like using ICT because it gives insight to why things are happening. It's not just price does this double top. I can foresee into the future. I don't know what just seeing a double top does not let you foresee in the future. You have a strategy, okay, and I take a sell, and then I take a 2R trade, or at the next support level. You know, um, that's as far as the insight goes. You can't do a top down like I did and build a story. You can't really build a story doing using those type of strategies, and there's nothing particularly wrong with that. But it's not my style. I don't know. I would like to know what's going on, and it can lead to a lot more accuracy if you're willing to commit to being that good at it, right? So anyway, got a bit sidetracked. So these are possible scenarios. Power of three, open, something get consolidation, manipulation, expansion, distribution, right? Accumulation, manipulation, distribution. There's a power of three. So you can see it in the candle. If you go to the weekly candle, ooh, what was that big explosion? You can get something like, turn it off. Power of three, right? Open, manipulation, accumulation down here, and then manipulation and then distribution. Open, accumulation, manipulation, distribution. That's power of three. Okay, so power three can happen on the weekly, right? So you have weekly profiles. There's tendencies that days have. Tuesday and Wednesday are often making the high or low of the week, and especially during London session, especially during certain profiles, right? So if we put on the where would I go to? maybe this one. Okay, so not always, but quite often, if you look at certain days, for example, here even Tuesday makes the low of the week. It almost breaks it here, and yeah, it closes Friday here. Here Monday, then Friday expands because of the specific news driver, etc., etc. You gotta back test it for yourself. You hit Monday, Tuesday. Tuesday makes the high of the week, and then close here. So that's the power of three for that, right? Or for the weekly profile. Open, accumulation, manipulation, expansion, distribution. So those are one of the tools that you use in building your bias and narrative. Okay, so let's go to the euro. So a nice gap here on the daily, and as I mentioned, it's a 3-day breaker. Why do I like it? It's clean. Up, 3 candles down, up, like that. And when price is down here, yes, beautiful. I want to see it come up into there. Now, but we have this huge wick. Okay, let's see where price wants to go. Price took liquidity, came down, took liquidity again, not close above these highs, and then big expansion down, which is leading me to think that we are going to go for lower prices. That's my bearish argument, which is good for my dollar analysis. Relative equal lows here. Go to the daily. Okay. Price came up into this breaker and expanded lower. Okay, so in ICT, he also has another saying that the bodies tell the story and the wicks do the damage. I have a video on this in my channel, showing it a little bit more on the chart. But basically, it's important where the bodies close. Okay, wicks can do whatever they want, but it's important where the bodies close. I'm trying to find an example, like in a gap, it's okay if the wick comes lower than the gap, but look at the bodies; they're not even closing below the midpoint. Or the block, the bodies around the midpoint of the two. They don't close below. Sometimes they do a little bit, depending on the speed of a move, but you get this, via experience. Look at this breaker here. Yep. This down candle for the up candle, right? And you see, it's respecting it. So I don't, and we expanded lower and created a gap as well on this daily time frame. Okay. So I'm very near an area I'd like to take a trade. I already took a trade on the euro actually because I'm expecting lower prices. So I caught one in there. But it's possible for price to come into this daily gap. Okay. And it's not a bad gap because there's a wick here and there's a body, and this whole general area will be considered an order block. And this equal lows. So I do not want to see a body close above here on the daily, preferably. I want to see, yeah, because then you'd have if you have a body close above, and then you kind of have like an opposing breaker here, right? Which can be used as support to go higher. So that's canceling out arguments and making things less probability. If that's the case, where does price want to go? The body closed here, going to its order block and then going down would be a bit weird, but we can go to the 1 week. We saw the CB there. Okay. We have a CB on the 1 week. So although we came into this breaker, came down, does price want to come down first and then come up? At least maybe take out this low, some external range liquidity. It didn't take out this low yet. Came here, took. Now we're here. If it goes up one more time, that's even more probability for me to take a short. can come into there. So what I do, I go to lower time frames and see what's in there. Is there more? Okay, there's more imbalances in there. More imbalances. Okay, this order block here. Oh, look at this equal highs. Okay, very interesting. Yeah, so these are equal highs. Price came into there. So what's one possibility then? Looking at this, turn off this, okay? So what am I looking at? What can price do on the weekly? Where's above these highs? Buy side liquidity. Okay, it's in here. So let's go ahead and look on the weekly. And it's got its trend line liquidity here. Yeah, where's that? Inside this wick. Okay, we can plot also. A wick has is like a gap, so we can plot that, the mean threshold. It's quite a large wick. What can price do? Can come up here, take that, and then come down. I'd be happy to short that if I saw that. If price comes into here on the weekly, I would likely have to be waiting for a 4-hour structure to form, right? So this is just on a couple of candles, and then you got to go look on this. You got to look on the lower time frame for structure. Okay, that's how you should do it. You shouldn't look at a higher time frame. Higher time frame structure overall, but where do you want to trade? In a small area, betting on trading a small thing here. Like what? Okay, come down, taking out this. I'm overall more bearish, but I'm going to target. I can't just target here and then try to catch a trade on the 15-minute chart. You know, it. I don't even know if my chart can go back that far if I'm going down to such a time frame. It's too many candles away. So I'm framing in. I'm looking in this area. Okay, this is where I'm hunting for a trade. To where? Just take out slow here, here, here. You guys, so many. You can catch 20 RR trades even in that span of in that range. Okay. So this is Euro. Okay. How can we build more confidence in our bias? We look at other pairs, similar pairs. Okay, or even opposing pairs. Not the fruit, not pairs, but forex pairs. This gap is not. It's okay. I think we can trade into there. We may make another low first. So yeah, like I said, check the news. What news is coming up? You don't have to trade Monday. You can let Monday play out. If you want to try catch a trade, catch it. You can grade your setups and probabilities. When the iron's hot and everything's in your favor, um, you strike with more risk, right? That's just risk management. It's not just about everything low risk, not too much risk, but when you have an opportunity, carpe diem, seize the day. Don't waste it, right? You don't you see he gets such a big move and then you didn't risk anything or you didn't get in the trade, then you revenge trade and try and force having that feeling after the move is done, and you're more likely to get wrecked in that situation. Okay, it's happened to me many times. Okay, I'm quite a stubborn person, so it takes me a while. Some people are more stubborn, some people less. Whatever, everyone has their own journey, and their results vary as well. So okay, yeah. So like I said, could come up to there. I think if price does come up to here, it's gonna come into there. Why not? Take that, go. Probably by a little bit. Probably a spike in the news. We can check it out after it happens, or if it happens. Come back to this video. But we see some nice equals. Yeah, I'll target down there. Let's go to the euro. Pound, sorry. So we see this gap on the weekly happening. Okay, very nice. If I'm gonna catch a long, I want to see some sort of manipulation on a lower time frame, indicating that we may be going higher. But again, that'd be trading against the general bearish arguments. So probability will be less. You can risk less, or don't do it at all, depending on your strategy, depending on you. Okay, going to the pound. Okay, so we had this busy 1 week, which looks nice. This is the pound. Go back to euro dollar. Okay, so the pound, we have some bearish arguments here of this busy. Okay, well, all right. So we had price come into it, and then take out this buy side liquidity, then down, then again fill up some this wick, and then down. Okay, let's go to the 2 week. See what's up. We had this gap, took it out, and now we're closing. We may close lower. Okay, but it seems weaker than it seems stronger than the pound. So we have this breaker here, which looks better than the euro. So go back to the weekly. Let's go back to the daily now. All right, so we took out this buy side, poop, and started coming down. Just like I thought, it would come up to this trend line. Now it's banded down again. Okay, so we have this daily gap. We're still in this weekly gap. So at this point, I want to see price come in. I took a short. I posted a short. I didn't take a short. I posted a short trade analysis on my profile, trading view profile. Now we have this. Okay. If you can get into there, I think two things you can do, right? You can wait for price to come into there and then try and take a trade, or you can wait for it to close as well. So we got this gap here. You got the bodies nicely respecting. I think we can come into here and come lower. There's still more inefficiencies and some bodies lying down here. This is one of my POIs for a possible trade. And overall, you can mark the range. We're not yet even at the midpoint, so I think we can go lower. It's possible. I'm bearish on the euro and bullish on the dollar anyway. Let's go straight to the 4 hour. Yeah, so I saw this buy side liquidity get taken and then price around here. I just got in on market. There's still this 4 hour gap, so it did trade into that and then boom, down. Relative equal lows here. Traded up into this trend line and gap, as it often does. How do I know it's that trend line? I guess it takes some experience to trend line. So it comes up to here, then comes down, then hits a bullish gap. So you expect higher prices and then gives up here. So now we have a 4 hour gap inside this daily. It doesn't have to take that, but you can just take out this high and then come lower. And possibly target lower. For more confluence, you can look at the New Zealand dollar, which is also correlated with the US dollar, of course. So look at this, all these equal lows, and we had a high that got taken out and then expanded lower. Imbalances, okay. Took that out, expanded all the way down here. So it would make more sense for me, I think, for price to come, take out the sell side first. So I can look for a short. There was this bullish gap here. CB and inversion gap. Okay. Price came into it. Now there's some relative equal highs, but look at the bodies. Just follow the bodies. You can see, okay, you can see this order block. Price came up above almost equal highs, closed down. But look at this candle. Came up to the order block again. Now it's down. So that's the candle, call it the candle science. Looking at that small range. So there's trades to be taken in there, but you can also wait for actual structure to form and actually properly come back up to this order block with bodies and then come lower. Okay, so you could take a trade in here using that order block, and you can take a trade in here possibly, but if it's overall structure, then yeah, you might have to look at something. You have to look at overall structure as well. And you got this nice trend line here. I think price wants to come down at the very least. We don't need to plan after that because this is a nice move. Okay, it's not that It's not that superb, but it's 30 plus pips there. Go to the 4 hour. Got a 4 hour gap here. And mitigation block here. Anything else here? Okay. Within this entire range, we're still very much at a discount. So, yeah, you want to be careful not to be forcing shorts at discounts. Okay. Sometimes you got to wait. Overall structure, and then you can look at the higher time frame. Equal highs here as well. Just a lot of patience sometimes. But in this range, okay, price came up, took out a low, pang in this order block. Now it's here. If we start expanding higher, we have this fair value gap on the hour. We can look to possibly take a long there into more of this gap that may possibly come down or may possibly come up to take excuse me, to take out equal highs and create more general structure. I don't see much gaps here, except maybe that one. It doesn't look too clean. Go on to 4 hour. You can see a bit more of a 6, any time frame. There's gaps here. There's more of an order block here. 9, 10, something there. I like to find the bodies. And 12 hour with daily. Okay, 2 day, nothing. All right, so that's it for this New Zealand dollar. Yep. Okay. So let's have a look on the 2 week as well. Okay. Okay, let's have a look on the 3 week. All right, interesting. Okay, a lot of liquidity up there, even here. But again, is it time? Is it time? Is it time to go there? So we got this breaker here. Okay, interesting. I'll use this. Okay. Okay. See, the bodies are respecting the, ignore the wick. Not ignore the wick, but you can see the wick come lower, take out this low. There may be like order blocks and stuff in there, but this is the higher time frame that you should be concentrating on. Yeah. Okay, so we had this gap here on the 3 week. It's very bright. Disrespected, which is fine. I like inversion gaps. So it closed here. Be a nice trade somewhere in here, taking a short to take out open to take out a low, basically. Then we expand again, take that out, and now we have a bullish gap here as well, and a possible inversion gap. So 3 week gap in this area, 1, 2, and actually 3 week. Yeah. Yes. So we have that 3 week gap in there. Okay. Just let me hide this so it's not blocking everything. Okay. Sell side here. Okay, see this gap here? 1, 2, 3 week. The bodies are not closing above here, although it's relatively close. We may see higher prices, but I think we may come down here first. Just have a look again on the weekly. Yeah, we have all this chop. I took that out. I think we can take this out. Stab into that. And then before moving higher, or maybe not, before maybe moving lower. Okay, so it's quite a drop from there. 5% for the New Zealand dollar. But it's okay. We don't need to get so caught up in trying to tell the entire move. We're going to target here first, okay? So it's nice. We got this weekly thing going on. The third is following bearish order flow, disrespecting bullish gaps, creating bearish gaps. That's a bearish argument. Respecting bearish gaps, bearish argument. Sell side liquidity, bearish argument. Okay, so the bearish arguments are weighing in the favor of taking a short. All right, so we just go down to the lower time frame and just take note. So the dollar index is normally inverse to the gold, right? Normally, not exactly, but so I did want to take a short. Anyway, it was just a short trade idea. It did come a little bit higher than I wanted, but it was based on, I think we're just on the weekly, right? Oh, it's not even CB. Okay, this is more like a daily. I think it's a daily. 2 day, 3 day, 4 day. Okay, look at this. Look at this. All right, price comes into this gap. Paints outside of it a little bit into the wick. But you see the bodies are rather respectful. And then we come down, big close on the 3 day. I don't know, somehow all these time frames align. And they're all working hand in hand. So see this close here? Yeah, respecting this mitigation block. Look at this wick. It comes all the way up here. Look at the body. Yeah, I'm curious to see how this daily 3 day candle's gonna close, which will close today on Monday, I guess. So side liquidity 1, 2, 3, 3 day candles 9. It's more of a gap here. This is a weekly gap. 1 traded into internal range liquidity. Boom. Internal range liquidity, and then takes out external range liquidity. Bodies do not close above. Comes down. The bodies close below this. And look where we are now on the weekly chart, respecting this thing at the moment. So let's go down to the daily. Yeah, so this is what we have on the daily. Weekly again. Yeah, this was that big candle. And there's one more big one in here, if you can see. Okay, where do you go to? Into this breaker. This is a unicorn because it's a breaker with a gap. You get one here, internal range, external range, internal range, external. Why is it doing that? Because it's going through the time frames. It's going through the different time frames. Okay, and if it sounds confusing, it's fine. You just spend time looking at it. You if you know what you're to look for, you can observe it, right? If you don't know what to look for, there's so many things happening. You could be looking at trend lines or RSI and yada yada yada. So many different things. But this is something you can observe, and I don't know. I think it's the best thing to observe. It's the most interesting thing and the most reliable thing, in my opinion. So what do we have now? Sell side liquidity, these lows, these relative equal lows. We spike all the way back up, or maybe getting, the bulls back in with just one candle, and then poo, it breaks above a little bit during on Friday, and then dumps during news. What a surprise! Okay, now we got this breaker in here. I like this. Oops. Yeah. So we made this come into that, and then come all the way down. This goes hand in hand with our bullish dollar bias. Anything on that? Let's go to the 4 hours. Okay, so 4 hours. Let's go back to daily again. So we came into this order block, 4 hour. Inside the order block is a breaker. So these are PD arrays, confluence of PD arrays. Okay, and then it comes all the way up to here. Look at the bodies respecting this breaker quite nicely. Look at the bodies of this breaker, and look at the bodies of this what do you call it, the candles that come into it. It's respecting it rather well, although they get a little bit higher spikes in the wicks, filling in this inversion gap and just filling it more. Okay, very interesting. And now what do we have? This breaker here. Ooh, if I see a breaker, I like to check the different time frames. Okay, this I see one on the 7 hour, and just see the gaps that exist. it's one here, but in the 4 hour is one higher. 3 hour, nice. I think 3 hour. I think we can probably. There's no gap here, so we probably can come into here. It's more of a premium. So this is too low of a time frame for me. I think we can trade in and then come down. Okay, this is my so-called prediction. At least you can wait for the candles to form and then take a lower time frame shift in market structure. So my bearish arguments are that those are trades that can be taken. This is the 4 hour. What is this? This is a. I don't really trade gold, so I'm not so familiar with the pips and how much they mean. But let's say on this euro, at market buy, that's a 80 pip stop loss, which is fine. It's almost a 2 hour trade, but it's 150 pip move. 150 pips. That's normally a lot, right? So it's so much better waiting on this time frame for setups to form and then catching a big move, and then laddering in is one type of technique you can use. Pyramid in your positions as they start to work out, and manage your trade for in the attempt to maximize profits, right? So there's all types of approaches that you learn as you move along, try different things, you explore, and you see what works for you. Okay, you could always look at a opposing pair, Japanese yen, and it's just spooling up, isn't it? The yen is just getting destroyed. Nice time to visit Japan if you have US dollars, or I think even most currencies. Okay, yeah, just ignore all this previous drawings. I wonder how the pound yen, yeah, pounds here also destroying the yen, and the euro, as we saw, is getting weaker than the um, euro, right? So what do we see? Spike all the way up, and then we close down. This is on the monthly. Create this monthly gap here. Okay, look at that. Price comes into it once, and that's a trade. Take out the low. Done. Comes lower, and then decides to spool up. That's a trade too. If you caught something on a lower time frame, comes up one more time on the month. Maybe there's a gap in here. It's a trade. Takes out liquidity. Maybe it's an order block or something. And you're bearish, and you do the analysis for both euro and pound, and you see which one's stronger. Straight comes here into this order block. Look where it comes to. Almost the midpoint, pretty much about the midpoint. Look at the bodies of this candle and all these candles respecting this mitigation block. That I don't know. It's quite beautiful actually. So where do we want to go? So spiked here, spiked there. Look at the bodies respecting this entire gap. Look at where this candle went, all the way up here. Can you imagine seeing an entire green candle on here and thinking, okay, we're gonna make new highs. You didn't wait. If you didn't wait for the candle to close, then look where the candle closed. Respecting this general. If we go to 2 month, probably can see something cleaner. Yeah, see, one gap here. And I go through all the time frames, as you may already know. I go on all the way to the 12 month. Yes, 12 months. Okay, we got a gap here. But again, this 1 year per candle. Okay, this is the financial crisis of 08. So don't think too much about a gap. But see price come all the way down. Not too many on this pair, but you see this yearly gap here. 2.87. That's when I was born. 1 year after I was born, euro pound, and spools down quite a engulfing candle, and 89 takes out that low of the year, starts spooling up and respecting this mitigation block, spooling higher, and then we come down, and you see that this candle comes into the breaker, comes down, it takes out that low, and then comes all the way down to this order block, and then we move higher. This is a closely correlated pair, so it's not going to, and this is the yearly chart, so don't expect it to do too many parabolic kind of moves. Actually, this is pretty parabolic. This is 2,000, 3,000 pips, 50% move on forex. 3,000 pip move would be nice, even on one lot. So yeah, okay, I won't go too long on this video. So that's my analysis for possibly taking a trade this week. Maybe today, maybe tomorrow. We'll see what happens. We'll see what happens. All right. Till next time. See you guys.